You're listening to Questioning Your Sense, where you get real-world, pragmatic tax and financial advice for business owners, entrepreneurs, and independent contractors. Here are your hosts, Kevin Mullen and Charles Steinmetz.
Hey folks, welcome to Questioning Your Sense. I'm your host, Kevin Mullen, and with us is our ever-present co-host, Charles Steinmetz.
Good morning.
Morning. How's it going today, Charlie?
It's a crappy day, so it's one of those just lethargic, rainy days, but good.
Well, we'll make it a little exciting today. All right, so start us off. Is there anything in particular you want to tell me about today?
Well, with the rainy days, it was just, I had experience driving in, and it was more just practice safe driving. So it was awesome. I'll tell you my experience. You want to hear my story?
Sure.
So I'm driving along, cooking along. I'm going a few miles over the speed limit. Who doesn't? And light turns orange when I look somewhere else.
Really?
It's orange.
Orange lights here in Texas?
It was very orange. It was not yellow. It was orange. Anyway, I turned from green to middle, and I made the judgment between me and where the line is, and I'm like, even if I slam my brakes, I'm skidding through everything. So I just barreled through. But it was like 2 seconds of red before I barreled through. But I'm safe, I'm alive, and I was about to tap my horn, I'm coming anyway. So be safe. Don't be like me.
Yeah, good idea. So
and how about you? Anything you'd like to share with me? Did you practice safe driving today?
I did actually. Yeah, I did.
Good. I'm proud of you.
Mostly defensive driving. So we had Thanksgiving over this past week, and my wife and mother-in-law made probably a few more pies than was necessary. And my wife's edict to me was that I must eat all of the pies before the holiday was over. I'm like, you've got to be kidding me. How am I supposed to eat all of these pies? So I did my best. I didn't quite finish them all, but I probably had too much pie.
Sounds like you just had a horrible week.
Yeah, it was terrible. Okay, well, today I think kind of what we want to cover is talking about amendments, some of the pros and the cons, some of the whys, some of the whens, some of the hows, and kind of go over all of that.
That's good.
I guess the first question is what is an amendment and why do we do it, right?
Sure.
So an amendment exists simply to fix mistakes, yeah?
Right, essentially. I mean, you file your tax return and send it in, and if there's something that needs to be corrected, a litany of things that can be corrected, and that's what amendment is for. It's just like, hey, here is they used to look different. They've been pretty consistent for years now. Here's what it was, here's the math difference, but here's where it should be, which is great. It's just these columns that says boom, 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 and that's what an amendment is. And it gives you a spot to explain yourself, but it gives you a chance to do that too. I don't think they ever read it, but it gives you the chance to explain yourself.
Yeah. Technically, amendments can be rejected. So when you submit an amendment, technically the IRS has the right to refuse processing of an amendment. I have never had one of my amendments refused. I assume yours have all gone through.
Yeah.
100% success rate in the amendments that I have filed. But there are also some, while the amendment exists to kind of fix your governmental compliance, right? So filing a tax return is governmental compliance. You're telling the federal government, based on your rules and laws and regulations, this is the tax that I owe. And so you're meeting your federal kind of annual filing compliance by filing. And an amendment is a way to come back to the IRS and say, actually, I know I filed this, but here is the reality, or here are the changes, or whatever.
I forgot this thing, there's a little more income. Or I didn't know I could take advantage of this thing, you should give some of that back.
Right. And so there are also reasons not to amend it, even though a change is necessary. Right. So kind of the one thing that I get a lot from my clients is, well, that's not my address anymore. Right. And so I need to amend my tax return to update my address. But the reality is the IRS actually has a form for you to submit to them to indicate an address change, right? So an amendment isn't necessary to change an address. Another thing, I've seen some frivolous things that people want to change a tax return, file an amendment, for example, a description of a piece of property, right?
Right.
So like something that they're depreciating on their business,
Right.
where we called it one thing, but it's really another
It's
brand
misspelled.
or something
It's
like that.
camera. It's camera or something. Or
Yeah.
camera. Or
Oh gosh. And so that kind of stuff, small de minimis things, right?
Right.
Kind of no big things. Have you ever had a client ask you to amend a tax return for something really, really de minimis, something no big deal?
Well, there's also some math de minimis things too. And so, you forget, Wells Fargo didn't send you, not to pick out them, but just the bank didn't send you interest that you earned for the year. And it was like $12. And that's the only thing that's missing. Yes, technically you should amend, but at that point, I'm going to tell you, it's not worth making that change. The de minimis on the IRS's side of things, they have that 3-year statute of limitations. What that means is anything within that de minimis range, if they don't catch it, they can't ask you about it. They're not going to come back on you
After
9
that
years
3-year
later
window. Yeah.
to say, hey, you forgot $12 of interest, right? So give them that opportunity. But if it's egregious, if you missed $120,000 of interest, what are you doing? But then they're going to say, hey, I don't care what the statute is.
Right.
You forgot income.
So I'm actually going to share with you a secret here. Most people aren't aware of this. Charlie is aware of this. But most people,
sure?
In fact, our producer Clark probably doesn't know this. Most people don't know this. But the way that the tax tables work is in $50 increments. Right. And so this $12 interest statement that Charlie is talking about, this
Right.
hypothetical $12 interest statement that you're missing, if that $12 does not increase your taxable income to exceed a $50 increment, your tax actually stays the same.
Right.
Your tax doesn't increase.
So $12,670 of taxable income to $12,682 of taxable income.
It wouldn't change your tax by a penny.
Nope.
Because we're not taxed on every single dollar. We're taxed in $50 increments. Clark, did you know that?
I actually did.
Did we tell that to you at some point? Or did you actually know that before you just worked in the tax world?
No, I had no idea beforehand.
So we've already shared the secret sauce with him. Anyways, that one's not actually a big deal, but
Right.
it's something that most people aren't aware of.
Right.
And so really any $50 shift or $49 shift, that doesn't cross a plane of a $50
Correct.
increment on your tax return.
May not actually make a difference.
Yeah, exactly.
Right.
Exactly. It could under certain circumstances, but
Correct.
in most circumstances it won't.
What is it? Does it depend, Kevin?
It always depends, Charlie. It always depends. Another reason why not to amend your tax return is, let's say that you're currently under the microscope, if you will, of the Internal Revenue Service.
Sure.
So they're auditing a tax return, or they're looking through your records, or they're doing something like that.
Right.
Even if you have a good reason to amend, it may be that now is not a good time to amend, right? Or it may be that you actually can't, right? If a tax return currently is being audited, you can't then amend that tax return right then and there, right? You've got to
Just
work
go
with the
change
IRS.
things. Right.
Yep.
Right.
Yep.
It's also possible the IRS was just correct in what they said.
Yep.
Often, most of the things the IRS sends out is just a mismatch, right? Hey, you have $15,000 of income on your tax return, but I have records that show you have $20,000 of income. Based on $20,000 of income, here's what the tax should be. And you look through your records and go, oh yeah, that's correct. You don't have to amend your tax return, because they'll send you something that says proposed amount due. If we're correct, please let us know. Here's how much tax the change would be, and send us a check. You don't have to amend under that circumstance unless you're contesting the math that's there. And they're not perfect. They make mistakes. You had some, data at some point
Yeah,
where
the study done in
more
2000
than half of what they did.
Yep. I'll just repeat that. There was a study done in 2011 that indicated that the IRS sent out those correction letters
Right.
at a 58% error rate. And so, yeah, I mean,
Don't blindly accept it.
Right.
Please look into it.
right.
But under the circumstance which it is correct.
Yeah.
I saw one this morning where I'm going to advise someone to say, hey, if this is the way that it is, they missed something. If they missed something, don't worry about changing it, especially.
Right.
I'll accept your math. That's fine.
So what about, I think that covers us on the when not to amends, right?
Generally, yeah, I think
Yeah.
it should.
What about when to amend?
Well, when to amend, I mean, you've got the two sides of the coin, correct? You have the when to amend of the, hey, there's a mistake. I really need to own up to something and report more income and pay more tax. Nobody wants to, but it's correct. And there's the when to amend of the, hey, you need to take advantage of something and you want to get some extra money back.
Yeah.
I didn't know I could write this college stuff off or whatever that may be. I didn't know I could take this particular deduction. Maybe those who didn't capture stuff from like Hurricane Harvey properly. Those are tougher amendments for different reasons, but something like that.
Yeah, by and large,
come back.
A majority of the amendments that I complete for my clients are to their benefit, not to their detriment, right? Because if they're coming to see us, we're already trying to capture absolutely everything that we need to be capturing, and we're trying to diagnose where other income is to make sure that everything is reported.
Right.
And often what happens is, they end up with, oh, I was supposed to claim, my child this year, and that kind of stuff, or things like that.
Well, I worked 16 little side jobs and I only brought 14 pieces of paper and forgot about 2.
Yeah.
I mean, who wouldn't at that many different times you work? Okay. That happens.
Yeah. Yeah. So basically the direction that the federal government gives us, that the IRS gives us is, and the specific verbiage that they use is any mistake, right? Any mistake. But the reality is we've discussed already a couple of mistakes that you may not amend because they're de minimis or they don't impact the calculation of the tax return and that kind of stuff. But the IRS's stance is that any mistake you should amend. Mm-hmm. But the reality is it depends on the circumstances, right? You need to review it.
And then you start putting into like context, right? So we've got, I would want to amend, hey, there's something that would be beneficial to me. I could get an extra $50 from the IRS if I were to amend. That may be looking at context of the time if you're doing it yourself, the time it would take to amend, or if you're going to pay a professional to do something. I would not advise someone to pay hundreds of dollars to then recoup $50 from the IRS. At that point, while it is to your benefit, you're never going to get in trouble for not reporting a deduction necessarily. I can't say absolutely never. You don't get in trouble for missing a deduction under those circumstances. And so at that, I would say it's not worth it to you on an economic point. I would be bad at my job if I advised you something like that.
Yeah, of course.
At the same time, there are some considerations. Are we ready to go into considerations of the weighing of?
We can dive into it if you have some thoughts there.
So we're looking at the when to amend, just making that educated decision. So I think it's more, I guess, cons. We'll look at the cons and then it's going to say, hey, weighing against the benefit. That's ultimately where I look at when to amend is, hey, is there a benefit or do I need to? There are some cons involved in amending, and then it's just wrapping it into the, hey, where's the weight? What's more important to me? Am I going to get $9,000 out of the IRS? I accept the consequences and let's go forward with this. Am I going to get $800 out of this? Pay $400 to get this done, and this is the risk I'm exposed to. Is it worth the difference?
Yeah, maybe not.
Maybe not.
Usually, I tell my clients if what their benefit is less than $500, absolutely don't amend.
Yeah.
But my target is usually $1,000, right? That's my professional target is usually $1,000.
Like if you net out of the deal or $1,000 of the amendment?
$1,000 total, right? $1,000 total.
Sure.
If by filing an amendment you can reduce your tax liability by $1,000, it's usually worth all of the other cons, which we'll dive into those here in a second.
Sure.
But that's usually kind of my threshold. I don't know if you've got a kind of a threshold that you really operate on.
More in the cons of a price 3 to 1-ish or so if it's going to cost X amount. So which ends up being around $1,000 more often than not. But some amendments are tough to put together and it needs to be a higher threshold.
Yeah.
So the more moving parts, the more risk you're exposed to, the higher you want that to be before it's worth your time.
Yeah.
In my opinion.
Now, one other thing that I want to mention, because you actually were talking about this, you had mentioned the person who had or would have received 16 pieces of paper, so 1099s in this case, right?
Sure.
Income-oriented documents, but only came with 14 to their tax appointment, thinking that was everything.
Right.
Right. So in that scenario, That person then determines that they have these 2 extra pieces of paper. And they call me and they say, hey, Kevin, I'm worried because we didn't get these in the filing.
Right.
My recommendation to them at that point is if you do nothing, you will get a letter from the IRS, and it might not be for another year, right? It could be a lengthy period of time before you get this IRS kind of corrective action.
Correct.
Now, in that letter that the IRS sends you, it's probably going to be right, because they're going to see that, hey, you were supposed to report this income. They're going to show it. They're going to increase your tax, and they're going to tell you owe an amount plus interest. And the amount on that letter is probably going to be right. And if they were to receive that letter tomorrow, then it would be cheaper and easier to just get the letter, pay the amount, and be done with it. But the reality is we don't know when the IRS is going to catch this and issue that letter,
They
which
often
means
wait more than a year.
Yep.
They want some interest.
Yeah, I guess. Which means it's actually, generally speaking, my recommendation to my clients is, yeah, we need to file an amendment, right? Let's just get in front of this and take the
preventative.
Yep, exactly. Take the leap before the corrective action from the IRS,
right?
Because there's also probably got to be some type of goodwill that happens. In the sense of I came out in front of this as opposed to I waited for the IRS to catch it.
Correct.
I would imagine that you're more likely to have issues on the back end long term if the IRS is constantly having to catch stuff as opposed to you coming out in front of it. Yeah. I don't have evidence to back that up. I don't have any specific clients that have had that issue, but that just is logic, right?
Right.
There's got to be a logical, connection there.
If it ever came down to arguing with the IRS, I'm using this as an argument to your benefit.
Yeah, of course.
Yeah,
absolutely.
Yeah. So we look at that with amendments too, as having the preventative measure if they look at it, which segues me perfectly into one of the cons. So an amendment, other than absolutely very recently, amendments are paper filed. Paper filing, the con in that is that you're guaranteeing a human at the IRS agency is going to look over your information.
So actually, can I stop you there real
Yes.
quick? Okay, because what Charlie is talking about is really important. The electronic filing system has dramatically changed the way that the IRS operates and the way that we as taxpayers operate by filing electronically. We are just another number in the computer, right? We're just pushing through the tax return. It catches a large majority of errors from self-prepared returns and all that kind of stuff. The electronic filing system has probably done more good for tax filing than anything else in the last 30 years, right? I mean, it really, really hugely beneficial. If you can ever electronically file, you ought to, because of all of the different things, the different benefits that you derive from having electronically filed. So now that segues into what Charlie is saying.
Correct.
In regards to you have to paper file, meaning that is a negative, right? So
Agreed.
Sorry, I had to interrupt you.
That's absolutely perfect. So, and a negative that you're going to guarantee someone looks over the information. That isn't inherently a bad thing. It's just many people that we end up dealing with have that heart palpitation when it has touch the mic there. Heart palpitation when it comes to dealing with the IRS. I don't want them to know who I am. I don't want them to, I mean, they have all your information, but it's just that sentiment. And so just the notion of you've got someone physically, they're just blind typing stuff in, but they're looking over your information. And so that can be a negative in that way.
Yeah, the way that I usually describe it is you introduce the human element into filing, as opposed to it just being done electronically, right? Which if the zeros and the ones work the way they're supposed to in binary, that everything goes through and it's no problem. If there's no hardware or software issues, electronic filing has been hugely successful. And by suddenly having to file on paper, introducing the human element, your name may just match that of their horrible, awful ex that they just broke it off with, and suddenly they want to look more at what you got going on, and who knows what ends up coming from that, right? The idea is that electronically filing completely excludes the human element, and by filing on paper, you introduce the human element again, in which there can be a number of negative outcomes. And so, one of the cons to filing an amendment, in many cases, is that you have to file on paper. Now, the reality is starting in August of 2020, they opened up the electronic filing option for some amendments. Now, they have some rules in regards to how many times.
Happy dance for that.
Yeah, exactly. They have some rules in regards to how many times you can amend electronically. I think it's 3 or is it 5 times? It was either 3 or 5.
I haven't memorized it yet.
But I'm thinking you shouldn't need to amend that many times in a year. My goodness, right? But I actually have already pulled the trigger on a couple of electronically filed amendments. All of them were accepted as far as I can tell at this point.
Current year only at the moment.
That's right. Yes, 2020. Well, 2019 tax returns in 2020. Yeah.
So expect next year we'll be able to amend 2020's for just file 2020 tax return by April the right way the first time. No problem. But
yeah, exactly.
Yes, we'll have that.
Expert advice: just don't make mistakes. Just do it perfectly.
I mean, it is correct.
It is. But anyways, that's one of the cons, right? Introducing the human element, filing on paper is not great. You want to avoid that if you can. There are additional cons, so why don't we go ahead and dive into that list?
Sure. So one of the ones that I point out is, again, there are cons as in quantifiable cons, and there are cons as in emotional cons. Are there certain things in life, a detriment to quality of life? I don't like this thing. I can't really put a finger on why I don't like this thing, but I don't like the thing. And that's okay. You can just not like the thing. So one of them is a time to process. So an amendment is not necessarily a quick turnaround. Now with the e-file soon, great. But isn't a quick process. Many that you stated amend to try and recoup something. A tax return you file electronically, you get your refund in a couple of weeks. An amendment you paper file, the IRS's processing window with a publicize is 90 days plus. And it's a while.
And what we actually expect is 8 to 12 weeks, right? And now with COVID, oh my gosh, Charlie.
Yeah.
I had some paper returns that were filed that the IRS, that we filed in March, that the IRS is just now getting to processing here in early December. I mean, so yeah, crazy time span in processing some of these paper filed returns.
So time to, and then kind of with that is an amendment generally gets a response, right? We accept this. So again, the sentiment, getting a letter from the IRS. If you use a professional, we're going to advise you and say, just so you know, you're aware, you are getting at least one letter, mailer from the IRS. Ideally, it'd say, hey, we accept, thank you for sending the information in. Great, please open the letter. It's one of our earlier podcasts of people who don't open IRS letters. Please open the letter. We need to know what's going on there.
Yeah, absolutely.
How about another?
Yeah, so another area, generally the statute of limitations that the IRS can go back, Charlie actually already mentioned it, is 3 years in most cases, not in all cases. If you underreport your income by more than 25%, that statute of limitations increases. If you willingly commit fraud, there is no statute of limitations. So a couple of things there. But the statute of limitations generally is 3 years. So let's say, for example, I file my 2017 tax return, right? And I do that in 2018. Then I've got 1 year into 2019, a second year into 2020, and then a third year into 2021. After April 15th of 2021, my 2017 tax return is outside of the statute of limitations, which means anything that wasn't, willful and that wasn't massively underreported, the IRS can't go back and audit those tax returns.
So that $12 from the bank that you missed.
That's right. No big deal. It's done. It's gone.
Correct.
It's forgotten, right? But what happens if right now in 2020, I amend my 2017 tax return?
Right.
That 3-year window, that statute of limitations, starts over when I amend the tax return. So that gives the IRS a longer period of time to look at it. Right. Also, remember we mentioned introducing the human element. If I file an amendment on paper, someone is looking at this. That could be cause for more scrutiny, right? before filing that amendment, there was no cause for scrutiny, or at least no additional cause for scrutiny, right? And by filing the amendment, there's just other, reasons to look at it.
Right.
Maybe the odds are not great, right? And maybe we just prepare an awesome amendment, and there's no problems whatsoever. You've heard Charlie and I both mention that we've never had the IRS come back and reject one of our amendments, right? I've never received that letter from a client. But those are still just different factors to take into account.
Yeah. One other thing to consider, I don't know if it's a pure con, but there's something to consider in that, let's say you do get something from the IRS that says, hey, there's a mismatch, the math isn't correct, or you contest it or something. We decide, hey, an amendment is an appropriate response to this. There's a right way to do it that should prevent things. However, the IRS, there's that adage, right hand and left hand. The IRS is really good at the right hand not knowing what the left hand is doing. So I use the opposite hands.
Classic.
It was good for them, though. It's the opposite right.
There you go.
Yeah. So they're good at that. So it's very possible that you have submitted an amendment or other correspondence, but submitted something to the IRS that identifies and corrects a mistake, and the IRS still send you stuff saying, hey, there's a mistake, you got to fix this. And so that doesn't feel great. Again, remember, 90 days plus for that amendment processing time. They haven't fixed it yet. It's not in their system. And so the other system that's generating the, hey, you have a problem, doesn't know that yet.
All right, Charlie.
You opened it. I opened it. It's your turn.
It's soapbox time.
Soapbox. I think this is going to be the new motion.
I am getting on my soapbox big time. I'm making it very clear. And I'm actually going to ask anybody listening to this, how many different systems, primary systems, do you think the IRS operates on?
Define systems.
Yeah. So I'm talking about computer systems, right? So how many different primary computer systems do you think the IRS operates on?
Well, of course, they work off of one. They're a government system. It all goes into the big mother computer.
No,
and
Charlie.
Then
no.
It's perfect.
So the IRS actually still currently operates off of the oldest computer system in the United States federal government. And there have been 4 additional attempts to introduce new, current, modernized systems, of which, of the 5 total systems that they currently use, which are still all in use, there is very limited integration between the 5 systems, because they have tried to modernize their systems but have not fully migrated. So, my goodness, the IRS is using 5 different systems. So one person that you talk to, if you talk to one person and then talk to a second person, they literally may not have the same information on your case. So when we say that the right hand doesn't know what the left hand is doing, the right hand truly does not know what the left hand is doing. You can call the IRS and talk to 4 different people and get 4 different answers to your question. It is truly outrageous what the IRS, kind of the systems that they operate under. Right. When we say that the left hand doesn't know what the right hand is doing, we are not being facetious. They truly do not.
Generally, while it's in process, once it's done and set, it's okay. Sure, once they have record of something that is finalized and completed and done. You have a done tax return.
But even still, yeah. Anyways, I don't have super secret special insider knowledge to the IRS. I have not worked for the IRS. I have not operated under their systems. But it has been factually reported and proven that they operate on 5 different systems, which is just, can you imagine running a business operating on a huge nationwide scale with 5 different systems, with branches and employees all over the United States who aren't operating on the same information. It's no wonder that, when one of my clients gets a letter and, they end up calling the IRS main line, and then someone tells them that that's not what the letter's for, that it's something else. And then we call the number on the letter with a power of attorney, and then they're able to confirm that the letter's correct. But then once we try to process something, then they send it back because or a letter, right? They send something, it's just awful. It's awful. It's awful. It's awful dealing with the IRS and the systems that they have until you get someone who you can talk to consistently, right? Because once you get to somebody who can actually solve the issue that you're talking to consistently,
Right.
Then oftentimes you can get kind of a resolution. But it's no wonder that people get frustrated dealing with the IRS.
Yeah.
You know?
Have you, as a child, did you ever go on like a tour of a factory or something, a chocolate or ice cream factory?
Yeah.
I really want to do that at the IRS office.
I know, right?
sometime.
Yeah, absolutely.
And there better be ice cream. I mean, not just that would be the pinnacle. I mean, I need some consolation. Where are the IRS? But I want to see all the things going on.
Yeah, absolutely. Absolutely.
Maybe we should call them one time and just see if it's even possible. Just
Oh,
it never hurts to ask.
Right.
Correct?
The if you want some secret insight, I say secret, it's not. If you want some insight into the IRS, the IRM, the Internal Revenue Manual, is actually available for public consumption.
Right.
And it
They don't like it, but it's public.
right, and it provides insight into why the IRS behaves the way that it behaves. Is kind of their prime directives,
Their rule books,
if you will. Yeah.
You pull a Star Trek reference.
Yes,
Okay,
yes. Thank you, Charlie. Understood it. I'm not really a Trekkie, but I knew that you would catch it. In fact, my wife is a little more of a Trekkie than I am.
Really?
Yes, she grew up. Her dad loved Star Trek,
Sweet.
and so she watched a lot of Star Trek growing up. So, anyways,
Next time we gather, I'm talking Star Trek with your wife.
There you go. You should. Okay. Other than that, I think mostly. Well, there's a couple of other things. We talked about it taking your time, right? So it takes time out of your life in order to process an amendment, either doing it yourself or having it done professionally. And you value your time very highly, I'm sure. I value my time very highly.
Yeah.
And so, you don't want to take time unless you absolutely need to. And so it needs to be worth your time. But additionally, you've got to keep more records, right? There's more paperwork for you to keep and all that kind of stuff. And so some people will see that as a downside. I've got people ask me all the time, when can I get rid of this stuff, right? Generally, if you have not committed fraud and you've not underreported your income by more than 25%, it's 3 years, like we discussed, right? So I tell people, burn or shred, right? You got to burn or shred the documents.
Yeah.
Don't throw them away.
It's got all your personal information on there.
Burn or shred anything older than 3 years. And some people, just can't wait for that 3-year marker. And some people have 25 years worth of tax returns. And I tell them that, and they're like, really? Well, I've got some shredding to do, so.
Yeah. Well, on the time one, just to throw it out there. So an amendment itself, we've been doing it for a long time, feels easy and natural for us. We have some pretty robust software that helps with that tremendously. However, for the IRS, to give some context on this, they have a lot of what they call publications and instructions for forms. So if you look at the Schedule A, your itemized deductions, there is a set of instructions that even goes mostly line by line of what goes where, why, which is nice. There are instructions for the 1040X, the amendment form. At the end of the instructions, they have an estimated time for completion for that form. It's not on every single one. I even looked, I was like, I want to know what their estimate is for every different one that I know. They don't do that. For this one they did, and it was like 8 to 10 hours. 8 to 10 hours is what the IRS expected the average Joe to spend amending their tax return. So when I say time, I don't expect to actually take you that long, but if there's a lot of moving parts, it could. So bear that in mind with 1, trying to tackle it on your own, 2, that being a con, and 3, consider using
someone like us
to offset that burden, as that were, or at least professional software to help you walk through that.
Yeah, because it doesn't take us 8 to 10 hours to complete an amendment in most cases. And some are very complicated, right?
Yeah.
But okay, I think the last thing to mention is, some people just hate standing out with the IRS.
Sure.
And if you're submitting a paper return, there's a reason they're looking at your name. And so some people they know that they could save $1,200 by amending the tax return. So let's say that they could save $1,200 and pay us, $300 to do the amendment. And so they look at that $900 savings and they just say, it's not worth it for me to run the risk of having the IRS look at what I have going on. And so, I've had a decent amount of clients who have just said, you know what, Kevin, it's just not worth it for me. Right. Because, I make sure to share with them, hey, these are the downsides to filing an amendment.
Right.
And there's obvious upsides, but these are the downsides. Right. And so, anyways.
Just throw it out there, an amendment itself, so that on the upsides, as you're weighing everything in, we have the cons, we have the pros. If you owe more taxes, a preventative thing, there are, positive things to the getting in front of and doing all that first, or trying to get some money from the IRS. As time goes by, the IRS, if you owe tax, will charge you interest. At the same time, not the same amount, but at the same time, the IRS does pay you interest. It does technically exist. And so it's not a huge thing. It's not a perk I wouldn't hold out for. I wouldn't say, I'm going to amend in 6 more months. I can collect a little bit of interest. Get your money now. Use it. There's that. We had that one a few podcasts ago about talking principal investing power and stuff. And so, but in that weighing of all of the things. And so I think as a decent wrap to, what is an amendment? Why do you want to amend? But then what are you weighing against it, right? It's not just a math, this, then this. It's difficult as a professional to say, you need to do this thing, right? I may have my opinion, but a good professional is going to lay out here's the pros, here's the cons,
what do you as a taxpayer value?
Right. What do you value? Where's your weight in that matter of what tip the scales to wanting to move forward?
Yeah, absolutely. Okay, so thanks for summarizing for us, Charlie. So I think we're ready to move on to comfort zone, Clark.
Sure.
Do you have a couple of questions for us today?
Yes, I actually have 2 questions for you today. The first one is, what filing status should I choose?
On what?
Okay.
With no other context.
With no other context, you should probably choose head of household. There we go. We're done. No. Okay. So it's not that simple.
This guy's fired.
No. So essentially, there are different tax tables on a per status basis, right? Correct. So the reason why I say head of household is because based on being a single income earner, head of household actually is the best or most preferred tax
rates.
Kind of rates. Yeah, sure. Yeah. Thank you, Charlie. Ultimately, your status is not something you choose. Your status, well, in most cases, is not something that you choose.
Right.
If you are single, then you generally only have one option, though a second option can potentially present itself. If you're single with no dependents whatsoever, then you generally file a single tax return. Unless you are common law married, not legally married.
If your state supports that.
Yep, if your state supports it and you are common law married and you meet the requirements, then you could potentially file a married filing joint tax return, though that's a very extreme case. Right. Doesn't happen very often at all. If you are married on December 31st at the end of the year, right, all that matters is 12/31, right?
I don't care how long you were single on that date.
Yep. So 12/31, that actually matters a lot. If you are married on that date, then your options generally are married filing joint or married filing separate. Generally speaking, if you are single and you have a dependent, you may qualify for head of household.
Right.
If you were married and you have a child under the age of 17 and your spouse passes away, you may qualify for qualifying widow or widower. So, I mean, shouldn't go into every single status, but I mean, you get the gist, right? It's not so simple, as to say what you should or you shouldn't do. That's almost an impossible question to answer.
You want to choose what's most beneficial to you. There was a point in time where people looked at that and there was a math difference of, this marriage penalty. It was never an actual term, just a sentiment of 2 single people making tons of money and they get married and they have even more tax than they were single. So that's been a lot of averaged out. That doesn't even happen until you hit like $400,000 or $500,000 income.
It happens eventually, right?
Correct,
the marriage penalty still exists, but your income has to be very extreme.
It used to be a bit lower.
Yeah.
And so there's that. So most people, if they're married filing joint, it's just going to end up being better for you.
Yep.
Married filing separate, there's an odd thing in the system right now that I want to just throw out there. generally advocate for married filing separate. It ends up being, on average, worse than married filing joint. However, those who have big bad student loans, there's some interesting student loan, not forgiveness, but just the way they do their math, in that they will consider your income if you file married filing separate. So if taxpayers' income, you and your spouse, your income it's different, right? One has significantly more than the other, and you file married filing separately, you're likely going to pay more tax. I have a couple, a double female couple, and their income is skewed. And it's the female with the lower income that has all the student loans. And if they filed jointly, her obligation to pay her student loans is $900 a month. If she files on her own, her obligation to pay her student loans is $150 a month. And so while they pay like $4,000 more in tax, you look at that and go, $8,000 a year in payments or $4,000 in tax.
Yep.
So as Kevin was saying, there's a lot of variables that can come into it. Generally, your status, I agree, is you are this is what you file. It just happens.
Yep.
Now, filing status for a tax return, I think we've answered. There is a status you can choose whenever you are employed. You file on that W-4 that says, how do you want payroll to do their math? I say that deliberately. It's not, if you fill out your W-4 and give it to payroll HR that says single, it doesn't mean you're filing a single tax return. What you're telling them is, I want you to use the math tables for single people. You can check whatever box you want on there. You can say you have as many kids as you want. All it's doing is telling payroll what math to do. And when you file your tax return, you're going to file what status you actually are. And the math will then just show, did you take too much out or did you not give them enough? It's what will end up happening.
Charlie, that was a little soapboxy. I'm pretty sure it was a little bit of a
Are you proud of me?
Very.
Cute.
And a little jealous.
Oh.
Because I like the soapboxes. The other thing that I will mention is imagine for a moment that instead of married filing joint, that married filing separate was superior, right? Imagine for a moment that was a superior filing status.
Right.
Generally, it's about 100 million tax returns a year that the IRS processes. How many more would it be to process if married filing separate was superior, right?
So they made it an incentive to...
I think that the federal government has a reason to make sure married filing joint is slightly superior, because there's just a whole lot more processing that would have to happen if married filing separate was generally better. So yeah, single is a fine filing status. Married filing joint is a fine filing status. Head of household is a great filing status. Qualifying widower, generally speaking, is a great filing status. Married filing separate is my least favorite filing status for tax implications.
Right.
Maybe that kind of answers your question.
That's perfect.
More than.
Thank you. The second question I've got for you today is, I pay for my daughter's college tuition. Can I get a credit for what I pay?
More depends.
Yep, it always depends. The quick answer is yes. The long answer is, do you provide more than 50% of her support? Does she stay with you for more than 50% of the nights of the year? Or are you paying for her, dorm room, right? Because when we talk about your household.
Right. Is she your dependent on your tax return?
Yep. If she's your dependent on your tax return, then the quick answer may be yes. But it depends. Because if you are a married filing joint filer with income exceeding or adjusted gross income exceeding $160,000, then you may qualify for a reduced credit. Or if your adjusted gross income exceeds $180,000, it may be phased out entirely, and you may not qualify for education credits at all, because there is that income range. By $180,000 of adjusted gross income, that credit's gone. It does not matter how much you pay. I've got dependents who pay $50,000 a year in tuition. I'm sorry, not dependents. I've got taxpayers, right, who pay $50,000 a year in tuition and are earning $200,000 a year, and they get nothing, nothing for that credit.
Yeah. So I agree. Quick answer is yes, there is a credit, whether it applies to the tax return in particular. The way you phrase that question, what brings to mind is what we're talking about is the sad situation where there are separated parents, right? So one parent is paying for the college of the child. They're saying, can I claim the credit? what it boils down to ultimately is it does not matter who pays for college. It can be grandpa, it could be my brother, I don't have a brother, but it could be my brother, it could be your child who gets their own student loans, it could be you, the one paying it. It doesn't matter who pays for the school. The college credit is attached to the tax return under which the child is claimed. So if spouse A and spouse B pays for college, spouse A claims the child on their tax return, spouse A is the only person who qualifies to claim the college credit.
Yeah, which is crazy, right? Because spouse B is the one who's actually paying it.
Right.
And so same thing with the grandparents, whatever.
Yep.
Or what if the child files their own tax return because they get that W-2 in the mail and they think, ooh, I want to get my $200 refund, and so they quickly go and file, and now suddenly,
no parents, no
parent
grandparents,
A and parent
nobody.
B, neither of them get to do it unless we amend the child's tax return.
Nice segue.
Woo, brought that right
Nice
back.
segue.
So yeah, that question is convoluted and complicated, but it seems like every question you ask us is. It's like they're deliberately vague. It's like Clark is asking us these questions without actually asking a real question. It's just bringing up a subject and forcing us to talk about that subject.
This is a part of our life, though, is something that we will share. I don't know if we've actually said this yet, but we get constantly, I have heard the phrase, I have a quick question.
Yeah.
And the answer to that we always say before we speak to the person is, it's not a quick question. You may be able to ask a question in 6 words or less. I am incapable of answering your question.
Actually, that's not
in
necessarily
6
true.
words or less.
Can I make estimated tax payments?
I can't answer it in 6 words.
Yes, you can. Yes. Yes, you can. Yes, you can. 3. Done.
Quick answer is yes.
Yes.
Then the rest.
That actually is probably my most common response. The quick answer is yes, or the quick answer is no.
Right.
Right? Because what they really want is just a quick answer.
Because early in the career, it's been the whole explanation, and they just want the answer. So we have learned quick answer.
Yeah.
And
The quick answer is yes. The reality is it depends, right? And that's a large majority of my tax answers. Yep.
Right.
All right. I think that's going to wrap us up for Comfort Zone today. Really appreciate spending time with you today, Charlie, and I hope you guys were able to get some information in regards to whether you have a tax return that needs to be amended or whether there's some kind of value there. As always, if you have a question about your specific scenario, please give us a call or shoot us an email. The information is in the link below. Thanks so much for joining us today, and have a great one.
Thanks for tuning in to this episode of Questioning Your Sense. If you haven't done so already, be sure to subscribe to this podcast, leave us a 5-star review, and don't forget to share it with a friend. If you would like to submit a question for our review on this podcast, feel free to email us at info@molintax.com.